At the edge of the trading floor in Chicago, standing by here with us, Scott Gecas with the Fox Group here. First of all, I want to talk about what's going on over here in this wheat market, a little bit of a rebound. There's a lot of folks kind of scratching their heads saying, wow, we didn't see that coming with all the pressure from the other outside markets here. Is there something big behind this?
Well, I mean, it's just a rotation of capital just moving back and forth. So in my opinion, at least. But I mean, it doesn't really matter. You can pretty much throw all the technicals out the window. Everything is coming from the headlines, the outside factors, the bearish news in oil, the price war between the OPEC and everything else with the coronavirus continuing to spread. I mean, it's really running rampant. It's just a completely fear trade. And you can see that just based on just the price movements. Big gaps, big volume, pushing it one way or the other. Volatility is going to be here for quite some time until we get something figured out.
Scott, what about the volume through all of this? What's it been like?
Well, I can tell you the option volume pretty much has definitely spiked over the last few trading days. I would say about the last 7 trading days or so. So that just means that people are starting to use options for protection, not necessarily speculation. You don't really see too much speculation in the grain markets with the options. It's more of a professional trade, just a way to protect what you already have. You know, the funds are still heavy short positions in corn as well as soybeans. So you're definitely seeing that upside calls being purchased. I am assuming by some of the funds, because you're starting to see that volume pick up. You just lock in some of those profits, or at least protect what they already have and onto the downside.
Well, and with all of this news, Scott, let's not forget that we've got a world supply and demand estimate that's going to be out tomorrow too. We'll be watching for that. Scott, let's get back to the livestock trade on the other side of this break and get your thoughts over there as well. That's straight ahead here on the Market Day Report. Back to the edge of the trading floor in Chicago. Scott, during the break, you were telling me something about how it's such a volatile, such a wild day, such a big market move that you've seen people pulled off of the trading floor. Give us a little bit of background on that and what you were telling me just a moment ago.
Right. Well, with the open outcry, you don't have necessarily to the second data like you do with all the electronic markets. So, you know, once you have positions put in, then it does reflect a little bit later. So if you have over the extension of your position limit as a trader, then that's not necessarily a good thing. Or if you hit your daily loss limit or so on. Either way, when you see people starting getting into over-exaggerated positions, one way or the other, it tends to have a negative effect pretty much across the board. So, I mean, you're seeing markets that haven't moved like this for quite some time. This is not a market for the faint of heart. It's definitely a professional trade. So if you look at the markets just as an overall, okay, we've had this complete run up in stocks in pretty much every market for the last 10, 11 years. You know, according to history, every 10 years we have a break, a pullback, anywhere between 30 to 50%. So right now it's holding true. Whether or not this is going to continue on, no one knows. But it's definitely just, you know, if you're going to place some type of position, use options for protection, use that insurance. Otherwise, I mean, you're just flipping a coin. And if you're right, you're right. If you're wrong, you're wrong.
Okay, Scott, thank you very much for the insight on all that. Sure appreciate it. Scott Gecas, he is with the Fox Group.